Hi, everyone, and welcome. Over the coming weeks, I will try to explain a little bit about the Forex market and strategies. But today, my focus is on three questions. One, what is Forex? Two, how big is the Forex market? And three, um, what it is that we do as Forex traders. Forex stands for foreign exchange trading. So we're dealing with money. We're dealing with one country currency against another country currency. For example, the US dollar going up against, say, the British pound. And what we're trying to figure out is which one is more dominant than the other. Is the British pound stronger than the US dollar? Or is the US dollar stronger than the pound? And then, depending on our answer, if we are right, we earn an income. Number two, how big is the market? Well, Forex or foreign exchange trading is the largest trading market in the world. It's bigger than the US stock exchange. It's bigger than the future markets. It's bigger than the real estate market. All of them combined. In 2013, it was estimated to be trading at $5.3 trillion a day. Last year, it was estimated at $5.1 trillion a year. And the reason for the difference in the market price is because Bitcoin and the Bitcoin market, called cryptocurrency, had kind of shifted people away from foreign exchange because it was all hyped to be the next best thing. So a lot of people had shifted away from Forex currency into the cryptocurrency. But now that they're realizing that the currency is really more hype than anything else, a lot of them are shifting back into Forex. And I am one of those people who never left Forex. I've always been a Forex trader for the last 2 years, and I will continue to be a Forex trader until I die, or until there's no more Forex trading. Now, as I mentioned before, it is our responsibility to try to figure out which currency is stronger than the other. Forex traders like myself only started in 1995. Up to 1995, it was all by control. And in fact, now I'm mentioning this, Forex trading for retail brokers, that's what we're known as, occurs from 5 p.m. Sunday until 5 p.m. Friday. And then the market closes down until it starts over again. But for banks, it runs 24 hours a day, 7 days a week. It never closes. So we use different types of strategies to try to figure out which way the market is going. Is it going up, which is we call a bull or a long? Is it going down, which we call a bear or a short? So we use something called indicators, which is software apps that monitor movement, and then it kind of predicts where the market is going to go. We use something called Fibonacci numbers, which is a mathematical calculation that was developed by a guy over 300 years ago, and it hasn't changed. And we also use announcements, what we call fundamental announcements, to decide where the market is going to be going. The trading periods are many. There's yearly trading periods that you have a strategy for that. There's a monthly trading period, which you have a different strategy for that. Weekly, daily, 8 hour, 4 hour, 1 hour, 30 minutes, 15 minutes, 10 minutes, 5 minutes, and 1 minute. And each one of them are different strategies or different plans of attack. But the bottom line is we use indicators for the Fibonacci numbers and fundamental announcements to predict which direction the market is going to be going. So that's a brief overview of what Forex trading is about. So when you see my postings in the success group, it is based on me applying what I have learned to come up with a prediction, which is either going to be a bull, which are long or up, or it's going to be a bear and short, which is down. Okay, bye for now.